Carter. I'm a client portfolio manager on npower's optimisation desk. Welcome to this morning's market update on Thursday the 1st of October. So today's the first day of the UK winter energy contracts, and we've seen the bearish theme of the summer continue into today. Key price drivers are likely to be, number one, we've got an oversupplied system, as despite higher gas demand, we've actually got good supply into the UK as well. Number two, we've seen oil markets tick up a little bit as there's been some support from an improved Chinese outlook and production cuts. And number three, we see the pound-euro pairing staying above that 135 level to provide a little bit of pressure on prices. Those are your main headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So, as it's the first day of winter, traditionally that brings a lot of change in the supply and demand mix in the UK, and today we've seen just that. So demand has picked up to over 230 MCM today from under 200 yesterday. That's actually largely driven by an increase in storage injections. We've got a number of sites nominating with Aldborough 17 MCM, Holford 4 and Rough 8 as well. Despite that though, we're seeing healthy supply into the UK. We've got a number of LNG tankers on the way, 4 before Monday I think, and that's leading to an increased send out of about 45 MCM today. We have seen a little tick up in domestic demand, that's over 100 MCM today, as temperatures are just dipping slightly as we move into the weekend. But elsewhere on the supply side, we're seeing healthy nominations coming from Norway through the Langoled pipeline at over 60 MCM, and also receipts into St Fergus terminals are also good today. Looking at the power side of things, we've got peak margins are pretty comfortable, just under 10 gigawatts today, despite peak demand picking up to over 41 gigawatts. We've got a slightly improved output from coal and nuclear generation, but wind is still disappointing with only around a gigawatt today, and that will remain low through the weekend, but early forecasts for next week are improved, with potentially up to 4 gigawatts some days. As I mentioned, oil markets have picked up a little bit today. We've got Brent contracts trading at around $49 per barrel. That comes following EIA data, which actually showed a build in US inventories of around 4 million barrels yesterday, but that's largely expected at this time of year. The supports come from Chinese manufacturing data, which has come out just slightly better than it was last month, and also some cuts in production from both the US and OPEC. Looking at FX markets quickly, as I said, GB pound sterling against the euro is still above 135. There was some decent UK data yesterday compared to some pretty average European data, but look out for further direction today, as there's manufacturing data from Europe, the UK and across the pond in the US as well. That's it for today. As always, if you've got any questions, please contact us. Otherwise, have a great day.